important, profiting from it all. And this is from Ben Oberg of Millionaire Mafia, which I suppose is a rather amusing name, giving our whole regulatory compliance. So once Ben gets up here, we'll make sure we get that starting. And again, for the people that weren't in the room, at the end at 5:30, when you're here, we'll be passing out drink tickets. There'll be a cocktail reception, and there'll be food. And we're also going to have a Women in Blockchain in room 402, which is right down the hall there, right after this, or right after the last speaker at 4:30 or 5:30. All right, so Ben, as soon as you're mic'd up, come on up. Thank you, Ben. All yours.
No problem. Okay, cool. All right, just so I know who I'm talking to, because I have no idea what your guys' background or things like that. How many of you guys are business owners? Just raise your hand. Okay, there's a few of you in here. How many of you guys are just here to learn? New to cryptocurrency, or if you're just looking to get a good educational background on it and stuff? Okay, cool. And then a lot of you guys know way more than I do. I just read a book about all this just yesterday, so I'm just kidding. Okay, so I'll give you a little bit of background on myself. I don't have a college degree or anything that says I know really anything about what I talk about. Most of my success, 95% of it, has come from learning from mentors and people that are in the business making 10 times more than I am with 10 times more experience. I learned by asking a lot of questions, and it's turned out pretty well. I went into sales at the age of 19, didn't go to college. I spent 4 years there actually selling cars, and a couple years into it, I started two businesses. Vulcan Customs, which is a metal fabrication business, and then shortly after, I started Millionaire Mafia, which is this company now. I'm an entrepreneur education company, so I teach cryptocurrency, I teach how to market on Instagram, social media monetization, salesmanship, and communication skills, because that's something that is not taught in school, most people lack, and I've done pretty well with it. So, in short, in 2015, I bought Bitcoin, and I didn't understand what it was. It was fake. It was fake to me at that point. It doesn't make sense. You can't hold on to it. It's not printed. It's not government issued. It makes no sense to me. I had about, 58, 60 Bitcoin at that point. I sold all of it because I didn't understand it. It didn't make any sense to me. So coming into about December of 2016, I was actually kind of facing some trouble in business. I couldn't find a way to pay myself. PayPal said, screw you, we're keeping your money for 6 months. You're making money too fast. Mortgage payment actually bounced, couldn't make it happen, and I turned to cryptocurrency. And that's when I really started paying attention. Just a little picture there. I teach Tai Lopez's members. I've spoken on a lot of panels before, done a lot of technical analysis at different events and stuff. And it's just really kind of a side hustle for me. But in 15, 16 months of investing since January of last year, I turned a $3,500 investment into $1.6 million. I didn't do it by luck. I wasn't, hodl, buy and hold, no strategy to it. I understood how to read charts. I spent hundreds of hours doing that. And after trial and error and failure, I figured it out, and I started winning on most of my trades. And I started doing coin research and understanding what I was investing in, which is kind of what I want to talk about today. And a couple of points I'm going to bring up first are, and I'll answer questions later for you guys, but I got some really good stuff I want to share. You might want to have a pen, piece of paper, write some things down. But going back to the basics, just like I kind of heard some of the people up here before me talking about fundamentals. And, to me, you got to look at why cryptocurrency exists and some of the problems that it solves. As a business owner, I deal with fees and chargebacks and all these different things all the time. And in cryptocurrency, that's not really something that exists. So we get away from, hefty fees. A $35 overdraft fee, a 5% processing fee, things like that we like to keep our money. We don't want to pay that stuff. Lag, 5 to 7 days on a wire transfer. It makes no sense to me. There should be no reason why I can't send my money to the person I'm conducting business with and have to wait 5 to 7 days for a bank to float my money, make some interest on it, and then pay the person a week later. It doesn't make sense. I want to have something instantaneous. So another thing that comes up is overdrafts. Don't like dealing with overdrafts. 2.9, 3.9% fees for merchants. It's, I think I have 5% on my merchant accounts actually. Chargebacks, exchange rates, inflation, and it's not internationally accepted. You might use a US dollar somewhere else, you can't do that without converting it and spending a little bit of fees. One of the mind-blowing statistics is, if you go back to the 15th century, there was 609 government-issued currencies that don't exist now. There's now 193 government-printed, what we call fiat currencies. There's 193 now. There was 609 more that don't exist today, back in the 15th century. So, simply put to me is, why put all your trust, all your investments in something that statistically doesn't work? Not to mention that we have $19 trillion of debt. Our whole entire economical system, our whole entire financial system lives off of debts, mortgages, interest, credit cards, debt. And that makes no sense to me. With cryptocurrency, you either have Bitcoin or you don't. You either have Litecoin or you don't. You got to put your money where your mouth is. You either have it or you don't. There's no such thing as a 6.9% interest rate or a $250 car payment. You have the money or you don't. And so it starts to make sense. Decentralized, no governing body. Really, you, everybody in here, we are the governing body. If 15 of us own Litecoin, we are part of that network. It's peer-to-peer. We're part of that network. We're part of what makes Litecoin, or Ethereum, or Bitcoin. It doesn't matter what it is. We are part of that. So it doesn't have, a governing body. It doesn't have a government that has sole control over it. We are that. And that's something that really gives more trust in society compared to walking into a bank and going, okay, well, I'm going to trust that my money's okay in here. I'm going to trust that it's FDIC insured for $250,000. With crypto, we can spend it when we want to spend it. We can receive it when we want to receive it from a merchant. It doesn't matter. We have options. Next thing. It's kind of hard to see that screen down there. Fast. Hours, minutes, seconds. Obviously, there's some cryptocurrencies that work extremely fast. Litecoin is very fast. Bitcoin is kind of the grandfather. It was the first. It's a little bit slower. A lot of other cryptocurrencies that have come out have exploited that, and they have very fast speeds, like Ripple, for example, 4 seconds. It has more throughput capabilities than MasterCard. It can process 1 billion transactions per week. That's as much as the debit or credit card capabilities in your wallet. Virtually no fees. Once again, you can't go into debt. And cross-border, for example, I was in Italy a couple of months ago. Euro's 23% stronger. Well, Bitcoin's Bitcoin, whether you're in Italy or Iceland or Canada, doesn't matter. Bitcoin is Bitcoin. Ethereum's Ethereum. Assets that also make money just sitting there if they have a purpose, and I'll talk about that in a little bit. And probably one of the bigger points to make is, this is a statistic, this isn't some BS that I made up. There's 8 billion people on Earth, 7.9 billion, almost 8 billion. 39% of them don't have bank accounts. That's 3.12 billion people. So when you have a solution for them that no other industry is solving, there's no other industry in the entire world other than cryptocurrency that allows that mass population of unbanked people, 3.12 billion, an opportunity to bank with themselves. What you have to understand is that when you eliminate the 1 day old, 1 second old people that are literally popping out of the womb right now, and all the people that can't have bank accounts because they're not of age, you're still left with billions of people that are unbanked. There's a coin called OMISGO, OMG. It's developed by a company based out of Thailand. They are trying to go paperless and develop a banking solution for people in Southeast Asia, and it's seeing a lot of adoption. When crypto was on a huge bubble back in December, January 17, 18, this coin was not on a bubble. It had really good utilitarian use. It was doing really well. It was solving a problem in society and an entire economy in Southeast Asia. And it's seen a lot of really good positive press because of that. It's had a lot of really good adoption. So when you have a financial solution to people that literally don't have an opportunity to go to a bank, it's miles and miles away. They have dirt roads. They can't actually afford to put $20 into an account. But with crypto, you can put $1 in, you can send $2, $3, 50 cents. It gives them a solution to 39% of the Earth's population. Now, of course, if 39% don't use it, that's another thing. But it is the only solution currently for that massive amount of people that don't have another banking solution. And once again, you can send and receive extremely small amounts. I want to talk briefly a little bit about blockchain. I know there's a lot of speakers and a lot of people at a booth here that are about blockchain, blockchain technology, blockchain companies, etc. The later part of my speech is really about earning. But I want to talk a little bit about blockchain. It's not new. Blockchain was developed in 1991, originally to timestamp digital documents, namely medical records. So it's nothing new. It's like a rectangle is a square is a rectangle, but a rectangle isn't a square. Blockchain can exist without crypto. Crypto can't really exist without blockchain. 91, and Satoshi Nakamoto comes along and says, I think this will work for what I'm trying to do, and it becomes what is used in cryptocurrency today. All it is a public ledger. You put data in it. Doesn't matter what it is. You could have brown skin, blue skin, white skin, yellow skin, or neon orange skin. You could put it into a block. They'd all have different data. They'd all have a different hash ID. They'd all have essentially a different barcode identifying that block. That's what a blockchain is. It's just a public ledger that's kept electronically. You can upload anything into a blockchain. Now you got proof of work, which is obviously mining, versus proof of stake. They're two different systems to arrive at the same consensus, saying yes, these transactions happened, or no, they didn't. They're invalid. So there's a couple different ways. Each cryptocurrency obviously has its own blockchain. Many are faster than Bitcoin, since they've had the opportunity to exploit Bitcoin's slowness or potential weaknesses and be able to create a system that works faster. Miners or stakers confirm transactions. If you're mining a coin, which there's a lot of miners. How many of you guys mine cryptocurrency? A lot of you guys do. How many of you guys stake? Any of you guys stake coins? All right, cool. So staking, it's almost like having a CD account. It's pretty cool. CD accounts, you might make 2, 3, 4% a year. With staking coins, you can make 5, 10% a year. Red coin, NXT, black coin. There's a lot of coins that you can stake. It works different than mining. It's not necessary. It's a completely different way of arriving at the same answer. Ethereum has a proof of stake system called the Casper protocol. Bitcoin is mined. There's a lot of coins that are staked. There's some coins that are mined. And it's two different ways of arriving at the same conclusion, validating transactions. This is a really good chart for you guys to see. Essentially, a blockchain, you have the first block, which is called the Genesis block. It's the first block, it's the beginning of that particular blockchain. It's called the Genesis block. Now, every single block, it doesn't matter if we're talking about inventory in a store, or inventory at a car dealership, or medical records, or tax documents. Every single block has to have data, a time, and an amount. So in Bitcoin, for example, or Litecoin, or whatever the blockchain is, you have data that goes into the block, which is going to be the transactions. That might be 2 transactions, it might be 2,500 transactions. You're going to have the time, the amount, the send address, and the receive address. That's going to be your data in a block. Now each block has what we call a hash. That's going to be the second element of a block. It's going to have data, and then it's going to have a hash ID. You could think of this as a VIN or a barcode on an item of clothing or an apple at a grocery store. You're going to have your data, and then you're going to have your hash, which is essentially a VIN identifying that block. The third thing that it's going to have, other than the Genesis block, is the hash of the previous block to link it back, thus creating the chain in blockchain. And once again, it can be used for really anything. Security is obviously super important with money. It's obviously super important with cryptocurrency. There has been hacks on exchanges. I think $50 million of new economy a few months ago was hacked off an exchange. There's actually been 3 extremely large hacks this year in cryptocurrency. And that's usually due to security breaches. Not in the actual coins ecosystem, but on the exchange or the platform you might be trading on or holding your coins on, the security of the wallet. So security is super important, but when it comes to security of an actual coin, if you wanted to hack Bitcoin, if you wanted to hack cryptocurrency, you'd have to have 51% ownership of that particular coin. You'd have to change all the blocks, reverse engineer them, change every single hash ID, all the way back to the beginning of time. That's not going to happen. If there's one of you in here that can do that, you are going to have a lifetime career 24/7 of trying to reverse engineer Bitcoin. It doesn't work. So it's very secure, and that's why blockchain is used. One other thing to understand about cryptocurrency is it's not just a currency. It's a currency, it's a technology because of blockchain, and it's a network, which is you, me, and everybody in this room that owns whatever that cryptocurrency is. Blockchains can be used for many things. Maersk, it's a shipping company. They use blockchain to find different flaws in the shipping process. If I'm taking a rose and shipping it from Bulgaria to China, and it's got to go through 6 international borders, I'm going to be able to find out where there's a discrepancy, where there's a flaw, where it gets stolen, where it gets lost in a matter of seconds. Walmart uses it on 7 products. They were able to track salmonella in mangoes within like 2 seconds, compared to something that would normally take them a week. Coin research, super important. Every coin, in my opinion, should be thought of as a company, because if, put it this way, you take ADA for example. It's a coin from a company called Cardano. Cardano is a company. It's a Swiss-based company. ADA is a coin that they've used to essentially crowdfund the problems that they want to solve in society, the solutions they want to bring into the industry. ADA is used to do that. So you want to think of these coins as companies. Do I believe in this company? Do I see it being here next week, next month, next year? It's super important. You take a coin like, there's a Putin coin. Putin coin. Who's gonna use Putin coin? I don't understand. If you're gonna use Putin coin, that's weird. There's sand coin, used to procure the finest quality of sands. I don't know how many of you guys need sand in here or need to use a cryptocurrency for sand, but the use cases for some of them are absolutely pathetic. So you want to make sure that what you're investing in is going to be here next week, next month, next year. It's got an active team of developers. What problem does it solve? What gives the coin value? It's going to be utilitarian use. It's going to be solving a major problem in society or an industry. What gives the company value? That's why I brought up that Cardano ADA example. I'm going to go a little bit further into this. Ethereum. Ethereum is a coin that I wanted to talk about very briefly, and simply put, you've got something called the EEA. It's the Enterprise Ethereum Alliance. Founding members of that were BP, JP Morgan Chase, Accenture, Intel. There's now over 300 companies in there, most of which are Fortune 500 companies, many of which are based in America, that got their advisors together, their financial advisors, their lawyers, and are either using Ethereum or Ethereum-derived blockchain, or creating their own tokens with Ethereum, using smart contracts, etc. So Ethereum is a very good example of a coin that has massive utilitarian use, and it's also a market coin, meaning that it can be traded for other alternative currencies, sold, bought back in at a profit, and make some money with it. I'm going to go on to talk about a couple kind of cases of profits and things that I've been able to do. This is one of the things that I actually teach in my company is trading cryptocurrency. And this is just a small little example. This is a trade on Sia coin, and it's kind of hard to see probably for you guys. That writing might be small to read, but this is in Bittrex. Bittrex is one of the exchanges that I trade out of. And essentially what I did is I bought some Sia coin, paid somewhere around 200 Satoshi, give or take, 200, 220. I sold at a profit within 24 hours and produced a 208% ROI. Some people think, oh, that's just luck. Some people go, yeah, that doesn't happen very often. The reality is, if you know what you're doing, like anything, you can make money with it. Why do people not trade? People are afraid of what they don't know. They're afraid of parameters that they think are out of their control. And when you look at what's going on in the world with a coin, look at what's going on in a chart, you can start to draw very educated conclusions as to what's going to happen. That's how I make my profits. This isn't a guess. It's no different than Forex, no different than stocks, mutual funds. It's the same in a lot of financial industries. Let me see if I can go back to that really quick. All right. If any of you use Bittrex, there's a plugin that I really like. It's called Bittrex Enhanced, and it allows me to see US dollar amounts. So if Bitcoin goes up or down, at the end of the day, I can really see what my raw profit was. And in this case, I put in $3,400, $3,500. I spit out $7,300 24 hours later, had a nice little payday. And that happens fairly often. You just gotta know what you're doing and what coins to invest in. And there's little scalp trades that I've been able to make. Scalping stands for like a short-term trade. It's a trade that you make within hours, within days, or a couple weeks. It's a very short-term trade. And this is an example of a very small scalp trade on Syscoin, where in 3.5 hours or 3 hours, something like that, I made a really good gain, and 21% in a matter of a few hours. Even right now, with Bitcoin being an absolute bloodbath, when cryptocurrency being in a bloodbath, you can make profits in what we call a bear market. Bitcoin was at 20 grand, December 17th, I believe, just over 20, and now everybody wants to jump off a bridge. And there's ways to make plays in that and still produce profits. I have maybe 2 slides left, and then I'll answer questions for anybody that has questions. But one of the things that I do to manage my risk, for example, is back towards the beginning of this year, January, February, I had only 3 Bitcoin, just 3. I sold absolutely everything in December. And the reason being, I'll kind of give you a scenario, and you can draw this out if you have a piece of paper. In September, I would have been able to purchase Bitcoin for $3,000, $3,500, $3,000, depending on the day. Now, by December 17th, just 3 months later, it goes up 667% in value, 667% gain. So we're talking about managing risk and not exposing ourselves to having a $20,000 Bitcoin and then having it tank all the way to present day where it's $6,200, $6,300. What we can do is we can buy in. I buy in low, $3,000 for example. I carry that Bitcoin up till it's right around 20 grand. Now, nothing, absolutely nothing in the real world on a chart would have shown that Bitcoin could sustain a $20,000 level. What happened is it sustained 12, 13, 14 grand in this area, and then it did what we call a breakout. Very sudden increase in volume, huge push up several $1,000s. Nothing in its past, nothing in buyer support would have shown that it could have sustained that. I'm looking at orders coming in. I'm looking at people buying Bitcoin. I'm seeing it slowing down. It's stopping. It's like, I used to be in car sales. I spent 4 years at a car dealership in Western Washington. It rains pretty much every day. It's about the most depressing state that you could be in. And in summer, we get like maybe 3 months of good weather. You're not going to sell a 4-wheel drive truck in summer. Nobody needs it. There's no demand. Winter 17 coming into 2018, buyers, they're losing support. People are jumping off. They're starting to sell out. People are seeing, hey, these are great profits. Now it's a seller's market. People that bought in early are now selling this coin because it's a huge profit. They sell the market down. It's simple supply and demand. So now I have a 667% gain I'm sitting on. I'm going to pull out. I'm going to exit the market. And I'm going to wait for it to go down and down and down and down, buy back in at the bottom. Long story short, April 6th happens. Bitcoin hits $6,701. I bought back in then. Looked like it was receiving support, goes back up. I make 48% over 4 weeks on every single coin. It goes up to about 9.9K, and I make some really good gains, and then I exit the market again. But what I'm doing by exiting the market is I'm limiting my risk. I'm not exposing myself to having a $20,000 Bitcoin go down to $6,000 or $5,000. And so basically everything that I said there, I wrote out on here. But I eliminate my risk to exposing myself to any sort of losses in the market. And sometimes, people will say, well, how did you know it wasn't going to go to 30 or 40 or 50 or 60? You're not always going to be right, but that is why I practice patterns. That's why I look at technical analysis. That's why I look at what is going on in the world to really understand what moves this coin this way. Why would it fail? Why would it continue to gain support? Did it hit this area in the past? Are there any patterns I can look at? And there's so many patterns. We have things called, this might sound Latin, but we have things called Fibonacci retracement and extension. We have RSI, which stands for Relative Strength Index. If it's over 80, coin's been overbought. If it's under 20, the coin's been oversold. We have Bollinger Bands. We use so many different indicators to determine if a coin's going to go up or down in value. I was speaking at a panel at Ty Lopez's house a few weeks ago, and somebody argued that technical analysis is absolute bullshit because you're looking at a chart saying, well, it's green here, it's red here, and then it did this twice, and then it swirled around, and then somebody got on their tippy toes, did a cartwheel, and now it's going to hit 20 grand. Well, my argument to that is everything that happens on these charts are controlled by us. We're humans. We're not that complicated. We buy when it's a good deal. We sell when we can make a lot of money. We get impatient. We think it's going to go down. We're afraid of losing. We sell out and we sell the market down. When you understand that, you pair that with what's going on in the world and with how people act and react to situations. If somebody walked up to me and punched me in the face right now, I probably wouldn't smile. Okay? We'd probably get in a fight. If you walked home and your car was smashed to bits and pieces, you probably wouldn't be tickled happy. We're not that hard to figure out. So when we start to draw conclusions of what we see on the charts and what's going on in the real world, we can make pretty educated, I don't want to call them guesses, but we can pretty dang spot on with our conclusions as to what's going on in the market. And that's what brings me to this. Cryptocurrency is the future of money. Blockchain is the future of business. We're used to actually using debit and credit cards from 1950 that was developed by the Diners Club, which I think is it's really archaic. It's funny to see that the way we still live is off of, 68-year-old technology. Makes no sense to me. If you guys want to find out a little bit more about what I do, I have an entire course that teaches A to Z, trading, blockchain, how to eliminate your risk and maximize your profits on minimal investments. And that can be found at millionaireMafia.crypto.com. So if you want, you can check it out there. Do we have time for questions? A couple minutes or
no? We're actually right.
We're good?
Over. So
okay.
Tell them they can see you at the booth.
Yeah, no problem. You guys can see me at the booth out there just to the left if you have any questions. Appreciate it.
Thank you very much.